And then joining me now is John Akridge. He's the CEO of Securities. John, nice to have you.
Good to be here.
And certainly a wild ride. Markets closing up today after those wild swings. What do you make of it?
Sure. I think this reminds us a lot of what this flash crash happened to the markets years ago. And I think a lot of it is just that there's not as many market participants, active people in the market.
So automated trading is the culprit here.
That is what I
blaming the quants.
Yes, absolutely. But I do think what we're seeing here is finally some stabilization. There was a quick downdraft, and now you're seeing humans back in the game, buying the market back up here.
Well, if you look at just a 5-day chart of the S&P 500, it's down 4.5% over the week, and as you can see, up and then tanks. We'll see what the trend line looks like tomorrow. Do you think this is an interruption of the bull market or the start of a bear market?
Definitely, we believe that it is just an interruption of the bull market. This is a very normal correction. It's probably long overdue. The market has needed this, and I think it's very healthy for the market.
So it's healthy, sort of like a fire that burns down the brush so that the new grass can sprout up?
Yes, green shoots again.
Right.
Here we go.
Okay.
Yes.
Well, this was all triggered by concern that the Fed is going to tighten rates after some data came out that hourly wage increases were up by 2.9%, which is good news for the economy, and that inflation is on the uptick. So what happened to those concerns? Are we just over them today?
No, I think that's a good question. And I think that as you look at the market, you want to see some inflation, but the question is just not too much. And I think that's really what the market is trying to ascertain. Where are we? I believe the way of looking at it is that we are seeing a normalization happen to the market as it relates to interest rates as well as inflation. So we're back to a more normal period where the Fed is no longer doing QE, less stimulative. I think we're back to a kind of more normal situation.
But if that was the big worry yesterday, why is it not such a concern today? Is there an indication that Jerome Powell, the new Fed head, may alter his position, taking market moves into account?
No, I think really it's just the market was really overbought, and it was time for a little correction. We saw it. Volume was very high, and I think you're going to see things stabilize from here on out.
What a crazy day for him. It was his first day on the job. Maybe this was all an elaborate hazing joke for Jerome Powell. The big picture, though, we heard from Mnuchin saying that the fundamentals are strong. Do you see any fundamental problem in the economy?
At the moment, no. Sure, if inflation were to heat up more so, then yes, maybe so. Wage inflation, seeing a little bit of a tick up is a good thing, but not too much. So no, the answer is I think things seem very similar to they were a week ago. And the sell-off really was just kind of out of nowhere, but it is good for the market.
So you expect the markets to close up tomorrow then?
Oh gosh, tomorrow is a tough.
Yeah,
sure. Tomorrow's a tough call. I think in general, though, the market should be higher over time. I think the market's in a very good place. The fundamentals have not changed.
Which sectors are you particularly bullish on?
Sure. I like some of the value sectors here. I think tech may be a little bit overvalued. I think looking at some of the financial stocks as well as some of the energy names who have been underperformed, I think that's a great place to look put money to work.
Now, also troubling investors is another potential government shutdown. Do you think that's going to happen? Are we going to get the government to shut down again?
As it stands right now, it looks like the answer is no, at least in the short term.
And if it does shut down, what do you expect?
What was interesting, though, is that the government shutdown didn't seem to affect the markets so much. Granted, it was over the weekend.
But maybe now with this increased sensitivity, the VIX is up, maybe that'll trigger some more concerns.
That is fair. And I think, yes, you do have to be aware that there may be some more volatility, some more downward pressure if there's more uncertainty. But in general, as we see it, our firm, Securities, does not see a government shutdown happening, at least in the next couple of days.
Okay, so the fundamentals of the economy are strong. We're still expecting the benefits of tax reform for corporations, expected to have higher earnings, paying less corporate tax, bringing back money, repatriation. But Europe was concerned about this as well, and we saw the FTSE down about 2.2%, well, rather, yeah, 2.4%. The European stock 600 down 2.3%. Why is Europe worried about us?
Sure. I think, look, it is a global economic system that, of course, is affected by everything. The U.S. does seem to lead the way, which is why we were down probably first. There is probably, you'll see the FTSE probably bounce back a little bit today where things, trade out over there. So I do think that it's rational to see the global markets react to the U.S. But at the same time, look, we are a global system. 80% of S&P 500 earnings were better than expected. I think we're looking for good things going forward, and there's a global recovery still happening.
So you see a dip as a buying opportunity?
Absolutely.
All right. Thank you for joining us. Appreciate your insight, CEO of Height Securities, John Akridge. Good to have you in studio.
Thank you.